content. Live. On. There is the notification that I'm on. It is Thursday, June 27th. Just so everyone's aware. Ooh. We have some good cross-ups here. And I had chocolate chips. I did have chocolate chips. Shame on me. Morning, Joe. Joe, I still haven't imported your Rivian strategy. Meta, Boeing, XLY, RBLX, Roblox, RBLX. Anybody believe me that this one's going back to 40? We've got a bit of a double top going on at 37, 36, 90, somewhere in that neighborhood, but I should make a fortune. I should just put like 30 grand, 40 grand into when it dips below 40. I should put it in there now because it probably is going to 40. I mean, Palantir's going to 25. It's going back to 25. I think I'm going to log out. Let me log out real quick. Because I think it's messing me up with... Okay. We're going to go over here. And then we're going to go... Brokerage holdings. Morning, Mark. I guess it wasn't the login. I gotta sneeze. Oh, I hate when I do this. Hoktua. You know what Roblox is? Roblox is a Hoktua stock. Gotta spit on that thing. Shake the cobwebs off. And GCT. I was just looking at an article on that. You're under 30. We talked about it, and that's where they picked it. I mean, you're down from where you were, but you look long term, and your first level of support is 25. Clearly, but could you go back down here to 5? Yep. I hold a small position in that one. MicroStrategy did get a cross-up yesterday, and I didn't post about it, but I got an alert. That's a good-looking stock chart for a turnaround. Again, it's a leveraged play on morning, Laurel. Leveraged play on Bitcoin, which I think is perfectly fine. I mean, that pullback on it was good. I need to get into that. NXE. Interesting chart. Energy leveraged ETFs. Let's see. SVXC. Facebook. AMDS. For all you penny lovers in there, she's in heaven right now. She's in someone's lap. Not mine. That's just a messy chart. I'd trade that one on a shorter time frame, but in the 4 hour it looks like it's crossing up. That's AMDS. So let me do this. that. And then I'm going to edit that. When triggered, 90 days, 20 times. Save edits. That's an alert for MicroStrategy for me when it is a buy. Okay, nothing in ETFs. Spider sectors. XLY we know got a cross up. Let's see if anything else. That guy's a CEO of GE. Definitely looks like hair plugs. Hair plugs? Definitely looks like hair plugs. Hey, listen, I dye my hair. I mean, I'm no better than anybody else. I color mine and STRL. That's setting up kind of nicely. Sterling Industrial. I mean, can see the staircase. A little bit high, but setting up kind of nicely. Let's go to the Dow. I'm just going to go to the Dow. Dude, because it's Thursday, man. Who's ever looking at my scans on Thursday, they're looking long term. Boeing is the one that crossed up. Let's look at the NASDAQ. Meta. Is Meta the only one in the NASDAQ? I don't like Philip Morris. Is Meta the only one in the NASDAQ, NASDAQ 100 that crossed up? That's interesting. Okay, let's go back to the strategy tester. And we will go to 4 hour. Morning, Skeeter. What I want to look at is Citi. Citigroup is up 1%. I mean, those stress tests last night. Let me see, is there anything on Seeking Alpha about the banking stress tests? Citi's my favorite bank to buy. Yeah, maybe that's it. Let's see this. We'll put this in there. Nothing to look at. I mean, that's big news, but it's not big news. But if you own banks, it's good. Let's see, anything new on material stocks? Southern Copper Corporation. Look at this 1 year gain, 51%. Year to date, 27%. Quant, strong buy. Wall Street says sell. Let's see how many analysts. 17 analysts in the last 90 days. All have had sell since it was trading at 69. This traded at 70, but you're up 30 freaking %. And Wall Street all say sell. CRM. Now, I do have a note in my thing. Did Snowflake reach bottom? And I think it's interesting in... has software flattened? I mean, I think as a whole, software might have kind of just hit a bottom mark. I mean, that would make sense to me that if we're seeing CRM turn up, I think you're going to cover. I mean, this gap at 260, you're going to cover it at some point in time. Yes, CRM is expensive, but at some point in time, Benioff's going to figure it out. Morning, Cecilia. Goldman Sachs down 2%. That's probably because of the stress test crap. Morning, Tyler. Let me start opening up some stuff. Tonight we have Nike. Nike's their expectations are high. Let's just say that. I mean, that last time they beat it 13%, 9%, but it's still going to be a tough slog for them, I think. We're hanging on to 480. Hanging on to 480. Let's open up some. I'll tell you what we're going to go through. We got Starbucks, social requests, HYLD, DJT. Somebody asked me about DJT. It's a joke. Elanco, which is a veterinarian medicine. Starbucks, Lunar, Intuitive Machines. Top 10 stocks for the second half. Micron's earnings. I do have to do Nike earnings. Let me see. Nike tonight. Let me see if there's a Nike expectations. There usually is. That could add to. I should put that one in. This appeared Sunday. It just does. Everything you look at Nike just says to me it's not looking great. Here's the top 10 stocks. What the hell happened there? Oh, there we go. Okay. It's not going to start automatically. There we go. Nike tonight. Then we got Micron's earnings from last night. We've got, is Dell still a buy? We've got GCT. Dive in while you can. Albemarle was up yesterday with lithium. And if lithium is in your playbook, I don't think it should be, but if you like that one. Amazon finally popped yesterday, and we'll look at that support level. It's a strong buy on Wall Street, and we can look at this one. Amazon finally got over that double top, and Stephanie Link is buying it. We'll put that in there. I didn't post this, but yeah, I'll post this. I'm going to be on a Twitter Spaces next week, by the way. July hot take. On energy. Why is the S&P so good? We'll take a look at that, and then the bank stress tests. So there we go. Okay, buckle up. I've had some sugar, but I don't think I'm going to be all hyped up. I'm still low energy. You know what's up? Pen W. You know what's up? Apple. You know what's up? Amazon. You know what's flat? Google. You know what's up? Meta. You know what's up? Microsoft. Nvidia's down 1%. SMCI up. SMCI is trying to get over that $900. It's gotten over there. Yeah. Tesla 196. When it gets to 200, look out. Taiwan Semi up 1%. Yeah. Costco's flat. So the core portfolio is looking like it's solid portfolio, like it always has been. You know what? We'll start out with Savvy Trader, because that's what I'm going to be on Spaces talking about. Savvy Trader, Savvy Trader, Savvy Trader. Do 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 do. Do do do. Okay. Let me see. Hold on. Twitter. Let me see who messaged me. I've never been on a Twitter Spaces, by the way. So, Wolf. Your boy may be becoming legit at this point. I don't know. We'll figure it out. Okay. I'm going to hit record now. If you're new here, hit the thumbs up button. I will be here. I'm here every morning that the market's open. We'll talk about it. Okay. Good morning. Happy Thursday. Happy debate day. I live in Atlanta. It is going to be a nightmare in this city, and I blame everybody because we've got a USA soccer national teams game in downtown at Mercedes. Then we have the Donald Trump and Joe Biden debate. It is going to be a nightmare. If you know anything about downtown and the freeways here in Atlanta, how they normally are, today it's on steroids. This is like Santa Claus, being shot down over Ireland. I mean, there were reports years ago of, Santa Claus being shot down over Ireland. But, for anybody that still believes in Santa Claus, Donald Trump has ruined it for every kid when he told that 7-year-old on the phone, you don't still believe in Santa Claus, do you? It was a pretty funny moment. I got to admit, that was pretty freaking funny. But yeah, it's going to be a nightmare. I'm going to be holed up in my house like I normally am. But I will be. Your boy has just become legit, I think. I got invited to a Spaces next Wednesday at noontime Eastern. I'll be talking about Savvy Trader, the CEO of Wolf, the number one space host for investors, NFT, Forbes, Bazinga. I don't know what I'm going to be talking about. I asked the dude, I said, what do you want me to talk about? What do you want me to prepare? And he said, nothing. I said, well, how'd you find me? And he said, well, you're the second portfolio on Savvy Trader year to date. And he goes, it's legit. He's part of Savvy Trader. He promotes Savvy Trader. They have a Savvy Trader portfolio. He says I'm legit because of this. I don't know if I'm legit. If you follow me, you know I do a buy and hold strategy. It is not something where I'm actively trading. You can see we're 6 months in, 45 events year to date, but I'm up 54% in this portfolio. Now, I would argue you may not even want to follow that portfolio. It costs you $25 a month to follow that portfolio. Maybe you just want to follow the core portfolio because the core portfolio, again, if you're looking for somebody to tell you when to get in and out, then Alpha Picks would be your portfolio. Alpha Picks is the portfolio for you. Don't subscribe to me. Pay Alpha Picks. They have a better performance than I do. They're going to manage your portfolio better. It's 2 stock picks per month, once on the 1st, once on the 15th. You get alerts when to sell. The stock picks over multiple sectors. We'll go over, there was an article about one today from Steve Kress on Seeking Alpha. If you go over to Seeking Alpha and you look, I have him marked as one of my analysts, Steve Kress, Bluebird, ready to fly, SA Quant. Between you and I, don't tell anybody at Seeking Alpha. Between you and I, that's the latest alpha pick, Bluebird. They're a school bus freaking company. How in the world would you find a school bus company that's actually up like 30, 40% year to date and has more room to grow? If that's something that you'd like to find out, invest in, and again, the performance is what you're paying for. 122% versus the S&P at 35%. And my link saves you $50. So if you want to save $50 off of that, again, it's the third link down here. But if you want to follow just, get some names, then, and again, I'm a large cap investor. Large cap is typically where I'm at. That's the big ones. And you can look. This is the portfolio. This is the core portfolio. It's 35 names. And you can follow it for free. Now, this isn't the portfolio that's beating all of the indexes year to date. But you can see this one, year to date, we can look at it. Year to date, this one is up 32%. The NASDAQ is up 17%. I would never recommend this stock portfolio to anyone. The reason is these are 35 names with 100 shares of each. Let's take, for instance, NVIDIA. NVIDIA just did a 10-for-1 split. I sold 900 shares of NVIDIA. Should I have? Well, I sold at 132, but I can almost guarantee you that NVIDIA is ending the year more than 132. I did not want to sell it. I sold it because that's the portfolio makeup. It's 100 shares. But say you're new to investing. Savvy Trader and my core portfolio is where you should start. You should go in here and say, you know what? I'm going to look at these 35 names. I want to invest in one. I want to invest in two. I want to invest in five. What should I invest in? You go and research those names, or you ask me which one would be your top five. I can tell you right now, my number one would be Apple. I don't care what the price is. That's my savings account. Number one is Apple. Number two, between Amazon, Google, and Microsoft, you make up your mind. That's number 2, 3, and 4. Number 5, I would say QQQ. Again, that's probably leaving out a bunch of specific high flyers, but that would be the portfolio that I would start with. And the reason, we're in an AI and a GLP-1 market. So if you want to, take out one of the Apple, Microsoft, or not Apple, Google, Microsoft, or whatever, Amazon, you can take it out and put in Lilly. But again, that's what the core portfolio is in. So I'm going to be discussing this kind of stuff on Wolf. And I'll probably get my ass handed to me by some of these douchebags, that scream, DJT is the next, the one you want to do. GameStop is just gonna explode. Roaring Kitty told us so. Probably gonna get my ass handed to me, but I'll hold my own. I'm older than most of these folks anyway. So let's talk about yesterday. We had a bank stress test. What is that? The Fed basically goes into these banks' reserves and says, you know what? If we had a run on all of these banks, how would we fare? It was fine. Yawn. If you're interested in the banks, pre-market, the only one that's up is Citi. I've said it before, Citi is the one that you want to buy. Before I go into the Citi chart, let's look at the Qs. Where are we? We're kind of, Bollinger Bands cinching up on the 4-hour. They're cinching up. MACD, crossed down. It's not going up. The strike line, they're kind of in tandem. We're going sideways. The RSI ticked up a little bit. We're in no man's land at 62. Nothing has changed. There is no reason to get out of this market. I wrote it in my newsletter 2 weeks ago. I wrote a paid one that says June's rally is setting things up nicely for July. Be prepared. And I said, hey, we may see a pullback in the last 2 weeks of June. We didn't. We traded sideways. There was no reason to panic. Just what I was talking about was realigning my personal portfolio. That's it. Realign, because July, when we look at the seasonality of QQQ, let's take a look at QQQ for the last, let's say 10 years. We'll go back to 2014 and we'll go back, January 2000. Look, 100% in July. And let's go back to 2010. That's 14 years. 100% in July. And let's go back to 2008. That's 16 years. 100% in July. You want to set this up. Again, June was a coin flip. We're going to end the month higher here in June. But look at that blue line. That blue line is the actual mean. So we're up in a mean 4.63% in July. How are you playing this? I would argue TQQQ. If you want to read more about it, you can go to this newsletter right here. This June's rally may set things up nicely for July. Yeah, it might be set up nicely for July. Again, the newsletter is free during the week, but if you want a little bit more, the weekend one is a weekend one. It's paid, but that's just to support me. The content's great. I think it is. I get positive feedback on it. And if you're a member, just message me on Substack or somewhere and say, hey, I think you should write about this. And if I feel like I have anything to offer, I'll write about it. Or I'll just answer your question, one or the other. But again, this bank stress test, something to look at. Now, we always talk about ETFs, and I like the Qs, but we can talk about the S&P 500. Remember, the Qs are just the NASDAQ 100. It is heavily focused on tech. So it is not a super diversified ETF. 100 names. I like it concentrated like that. This is the growth. If you look at the Qs over a certain amount of time, it beats SPY. But the Goldman Sachs, why is the S&P 500 perfectly constructed? We can go and look at some of the chart for SPY. I like VOO. If you want SPY, I think SPY is better for options, and SPY is better, for that kind of play. But I think VOO over the long term, it's lower expense. It'll make you a little bit more money. It's marginal at best. So either one that you want, it's exposure to the S&P 500. Long story short on this one. Why is it the greatest thing ever? Long story short, what they say is, hey, it can go up. The top 5 names can continue to go up. And we can, the market can perform even if the 495 go down. But when those top 5 go down and the 495 go up, and that's what you're starting to see. When the top 5 start to go down or trade sideways and the other 495 go up, we're going to go up or we're going to trade sideways. So what they're arguing is it's the greatest place to put your money. And they kind of guide you through, if you put $1 in there, what you're actually investing in. If an investor allocates $1 in the S&P, 28 cents go to the top 5 stocks: Microsoft, Nvidia, Apple, Amazon, and Meta. So yeah. Walgreens Boots, they reported an absolute disaster of a quarter. Absolute disaster. I don't even want to look at it. They're going to close half their stores. There's no reason to be in Walgreens Boots. I said that when it got taken out of the Dow. I forget who was put in there, but when it got taken out of the Dow, there's no reason to invest in Walgreens Boots. Nothing. I mean, they reiterated it today with the earnings. There's no reason to do that. So you want to know a good one to invest in July? Maybe energy. Energy stocks sizzle in July. Over the last 2 decades, XLE has a 65% win rate. That's 20 years, by the way. That is probably almost on par with QQQ. XLE has a 65% win rate in July, the second highest win rate for the ETF. Now, XLE, this is the energy. If we go over here and we look at XLE and we look, is it setting up for a nice July? I would argue yes. This top one here, that's probably from the weekly. And we can look at it. Yes, this goes all the way back to the all-time highs back here. I think it was way back when. But you can see you're putting in a nice little top there, a nice little top. That 93, 94, 93.31 around that point, that's going to provide some resistance. But I think you set it up to actually go up to 100 from there, and that would be a fantastic July. Now, if you want to look at XLE, how do you find it? Well, you can go over here and we can type in XLE and we can just say, okay, what's in the XLE? Well, again, Exxon's the number one. That's 22. There's only 25 names. Exxon and Chevron make up almost 40% of this. So in my mind, I think you want those two. But if you just want the XLE and extend it out, that's fine. I've got an entire watch list of energy names that you can trade in TrendSpider. But look at Exxon. Under the 200-day, buying at 112, you're at 114. It's moving up. I'd argue that 119, 120 is probably a resistance up there. But that would be a fantastic move for July. Again, we're setting this up for maybe some long-term buy and holds. If you made 5% in a month, I guarantee you will be happy. This is not something where you're going to, invest in Exxon and all of a sudden it's down at 50. Exxon was not down at 50. This is a staple company that will be fine. They're making money. Anything above $40 on oil, they're printing money. They're going to give back to you. They're going to do a buyback. You're going to see a pop in this one. Again, from a weekly standpoint, the MACD, it's low. It's not crossing up, but it's turning. It might cross up. You might get some confirmation here. So again, just kind of pointing out that there are sectors that are doing really well. Snowflake. This analyst says it's finally a buy. I've been saying this before. Yesterday, Shea Boular posted on Twitter because he's big on Snowflake. I think he's got what, $80,000, $90,000, $100,000 into Snowflake. He posts his position. I've said it before. This range right here, it's not perfect. 126. We're at 129 right now. You could have bought it at the very bottom. I would argue you don't want to buy this at 126 until the 4-hour algorithm actually tells you to get in. And when the 4-hour algorithm tells you to get in, you wait for confirmation. Look, this one has you in at 130. It never had full confirmation. It did this afternoon, but I would wait for 2 candles to confirm over the 9-day. That's my personal opinion. That's the way I trade. If you want to know how I trade, go over to the newsletter. There's a whole education center that you can sign up for down there. That's it. But I would argue we are in this range, and that range is between 120 and 200. It will pop to 200 again. You can read this article. Has Snow finally bottomed? He goes over the fact that it is extended as far as valuation. But have we hit a bottom? Maybe. Again, I would argue that we have to wait for the entire software sector to hit a bottom. So you follow, some of those ETFs that do software. If they start turning, then you buy the individual names. That's the way I would play it. Don't try and time the bottom. You want to miss the first 10% and gain the next 20%. You don't want to try and time the bottom. That is a sucker's game to try and just continue to buy a lower high. So, but again, Amazon. We talked about Amazon. By the way, I will put in the newsletter, Bullish Bites is positive on Robinhood. TrendSpider posted a wedge yesterday. Wolf Research upgrades Robinhood markets to outperform with a price target of $29. Bullish Bites, which is an Instagram account, which those guys post great analysis, but they're big on Hood. It's trading at $22. Wolf Research says that it's going to be $29. That's their price target. Algorithm got you out with a nice 16% gain. MACD looking like it's going to cross up again. RSI at 52. Could this get the pump back up? Again, this is a very expensive stock. So just be prepared. I'll post the chart in the newsletter. Now, as far as the Amazon goes, we talked about Amazon. Steffi Link is hitting the buy button on Amazon. She goes over it here. She is the best fundamental investor that I know. Honest to God, she just knows her numbers off the top of her head. She can outline earnings. She can outline everything. We talked about Amazon, this 188 being a multi-year resistance level. This goes all the way back to 2021, okay? July 2021, it hit it, it pulled off. This is a weekly chart. November 2020, it hit it, it backed off. Then here in April, it hit it, it backed off. Then here in May, it hit it and backed off. I said at some point in time, this resistance will turn into support. We have 1 week. If we close this week, again, if we close tomorrow above 188, I would say this is the takeoff pattern. Amazon is an interesting play. I said it at the beginning. It is one of my top 5 picks that I have in my own portfolio. It's one that I think is a fairly decent buy here. Amazon joins $2 trillion market cap. Remember we talked about the Rivian pop yesterday of 50%? Amazon has an enormous stake in Rivian. That's what popped this one. It was up 3.9% yesterday. It's up in pre-market today. If we take a look at this, it's a hold in the quant. And the reason it's a hold in the quant is the valuation. The valuation is the only thing that's holding this one back. Now, it is incredibly expensive. But I would argue their growth and their cutting of costs. Andy Jassy, who's the CEO, he took over from Jeff Bezos. Jeff Bezos spent like there was no tomorrow during the pandemic. So Andy Jassy had to cut costs. We talked about it. There was no demand problem. If you've listened to me for years, in 2022, I was saying, hey, there is no demand problem. This is a cost problem. Look at this drop right here. And down here at 80, I was pounding the table. I said, buy this damn stock. There is no demand problem. This is a cost problem. This is a multi-year buy. and you can buy this one, and I guarantee it's going to be good. And even during this dip of 2023, when we got down to 130, I said, buy this one. And I've been adding the whole time. My average price cost on Amazon is something like 70, 60. I mean, I've been buying this one for years. And it's not, not rent money. I'm not buying it with rent money. I'm buying it with money that I'm looking out for a 5 to 10 year horizon. So if you're looking for something like a 2-day or a 10-day, Amazon's not your game. You want one with more volatility than Amazon. If you're looking to grow a portfolio for multi-years, Amazon is one you want to add to. And yes, when you get to these highs, like when you get a nice 50, 60% bounce, when you go from 106 up to 130 and you start to see weakness in this, yes, you can trim. And then you can buy on the way down. Because you want to trim when it does that. You want to trim when it got to September of last year. You wanted to trim when it got up here. I trimmed at 170, and am I upset? No, I'm just going to buy when it provides support at 188 again. That's the way you manage a portfolio. That's the way I manage a portfolio, I should say. Now, Albemarle was up 8% yesterday. This is one, the low price does not justify new spending on plants, Albemarle exec says. They're going to hold some type of auctions and stuff. This is lithium. ALB has been an absolute disaster. People thought, oh my God, electric batteries, we're going to need lithium. No, the market in lithium has just taken a dive. This is a simple stock that is upper left to bottom right. You don't want to time this one. You want to wait for confirmation. And I would argue you want to wait for confirmation on a long term, meaning a weekly chart. The 4-hour just got you in. And it is on I think it's on our energy list that we trade. Let me see. I may have taken it off. No, it's on the energy names that we like to trade. But I would argue you want confirmation on a long term because the lithium story is different than the rest of the energy story. Now, the MACD, super low. Could it go lower? Absolutely. But when we run this one, the algorithm actually, on a back-tested strategy, it loses you 30%. But if you buy and hold this one, you lost 54%. The story has not changed. It's still a crazy, crazy story. The valuation on this one is nuts. So it was one of the big winners yesterday. I wanted to point it out that I don't think that the story has changed at all. I think it's still a crappy story. One that's not a crappy story, GigaCloud. GCT, a lot of people are in this one. It crossed the $30 mark. It's up 1% in the pre-market. It was up slightly. It is still a strong buy. This is an article. Dive in while you can before the next big squeeze. That's it. GCT, we talked about this one. I am holding this one at, I think, 33 and 38 and 40. I think those are my 3 buys that I've done in this one. It's not a very large position. It is a very small position for me. Again, this is an alpha pick that came out. Let's see. It came out. I'm not supposed to say it's an alpha pick, but it was an alpha pick in April. That's 3 months ago. I mean, come on. We're cutting hairs. They told me I can't say alpha picks, the specific alpha picks for 3 months. But this is an alpha pick, GCT. I will tell you, at 25, there's not much support. You might as well just wait till you get to 18. So at 25, I may sell. But this one continually seems to just find a pump. And so if you want to buy here when the algorithm tells you to get in, it just gave you an indication yesterday, $29.95. $29.42 is where you're at right now. So but I've pointed this out before. On the weekly chart, this could go much lower. This is why the 18 is a support level, because the last time it had this big pump, it pulled back big. For weeks, it pulled back. This is, let's see, September 2023. The first time it got confirmation was December. That's 4 months. Now this one, it got up here to 45, and then it pulled back. That was in March. We're 4 months later. Could it get another step higher? Could. Again, I'm just looking out long term on this one, and I'm trusting the team at Alpha Picks. I'm trusting Seeking Alpha. They have it as a strong rating. Steve Kress has talked about it a lot. He said it's a good one. Another good one, Dell. Dell, my top AI derivative play, just went on sale. This guy talks about Dell. It's a strong buy from the analyst. It's a hold in the quant. And we can go and we look at Dell. I've said this. there is a range that you can buy Dell, and I believe it's setting us up to go higher. And so the range is between 132 and 143. We're trading at 138 right now. In the pre-market, you're down 0.14. AI server names, meaning Dell, SMCI, and HPE, they can't get out of their own way. They keep pumping. Algorithm just got you out with a nice 2% gain, by the way. Good 2% gain over what? 7 days, July 14th. So maybe 2 weeks. You got a nice 2.5% gain. This gap will get filled. We started to fill it. This candle got all the way up to 161. It got up to 161. But this gap up to 168, it will get filled. It's just a matter of where are we going to put in the lows and what's going to be the news. This is all catalyst. We had NVIDIA, the shareholder day yesterday. But this article, why is Dell his top pick? Well, you can go over all of the buys. So read this article if you're into Dell. If you want to buy Dell, just go and read that article. Now, as far as the AI stuff goes and earnings, Micron yesterday shit the bed. This was down as much as 10%. It's down 4%. I would argue you buy the dip on this at 135. I would wait 3 days. So, for me personally, if you want this name, buy it. But for me personally, I'm waiting 3 days. It's going to create a little bit of a gap unless we go back up to 142 during the period today. You're going to create a gap. All the gaps are filled other than the one down here to 114. And the earnings were good. I mean, if we go over here and we look at Micron, this is Earnings Hub, just by the way. The estimates were for higher. They beat it by 21%. 21%. They beat the revenue by 2%. The whisper numbers were a lot higher than 51 cents and 6.67 billion. So they didn't beat it by much, but they did beat. The problem was it ran up into this. And the other problem was they didn't give oh my God, we're going to blow it away guidance. They just said, yeah, we're going to meet your expectations. And that's a problem with the market. You can see market just opened up. That candle just started. If we don't get back up to 142, you're going to have a gap. Now, remember, this was 10% down in pre-market. If we just turn on the pre-market stuff, you can see. Let's go to, we're going to go to a 5-minute. And so after yesterday, the earnings, it came down. We've been putting in a floor right here at about 130. You're at 134. And it's selling off. Again, wait. Do not trade a stock that had earnings in the first 5 minutes unless you have actual confirmation. This has no confirmation. The candles are a little mushy. You just don't want to trade it. But it got hit again by 10%. This is a company trying to get profit margin. If we go over here and we look at Micron, it's a hold in the quant, strong buy on Wall Street. And the analysts may come out and have higher price targets, and you're going to see the thing. The problem is the valuation. They're not making money. The profitability right here, they're not making money. They need to be able to make money. And so when they guided, hey, we're just going to be in line, yeah, they're going to be positive cash flow, but it doesn't seem like they have a huge amount of pricing power. They're relying on volume rather than pricing power. So I like this name. I'm in Broadcom. I'd probably going to switch from Broadcom to Applied Materials or one of the other names on that one because Broadcom has, it's split 10 for 1, then it's pulled back. I'm still up on it, but I may invest in some of the other ones. This one, I'm a little bit like it. I like it. It's up 117% in 1 year. Year to date, it's up 66%. It can pull back. So wait a couple of days. Wait for this one to settle down. I like it. One that is reporting earnings later tonight is Nike. I would argue that this isn't one that you want to play with. And the reason is, this is an article that was posted just a couple of days ago. Nike losing traction to Adidas, Citigroup study finds. That's not something you want to see. If you wear specifically all Nike, buy Nike stock. At $93, you may get hurt by 10 or 15% in the short term. But if you continually wear Nike materials and wear Nike shoes, just buy the stock. But if you don't rush to get into this one. It is not one that you want to rush into. I have a small position in this. I think I bought at the highs at 120. We are talking $1,000. This isn't even 1% of my portfolio. It's not even 0.1% of my total portfolio. I'm in at this gap up here. I bought at 120 before the earnings. It popped in the after hours, and then boom, it just crashed. And I haven't gotten out, but I am going to add to my position. But their earnings tonight will not be the reason I add to the position. It will be their guidance. It will be China's coming back. It will be our margins are improving. It will be we've got new shoe technology that's going to sell more Jordans. Something of that sort. It's going to be the story that gets me back into this name. Anything other than that, I'm just being patient. And I'll hold on to that maybe I'll sell that short little stuff. That small pick. I don't know, but it's not one that I'm looking to get into. If you look at it, 77 cents they reported. Their estimate is 83 cents. They're expected to grow. 12.43 billion. They're expected to grow to 12.85 billion. If we go and we look at the Nike, the Nike growth, it's a C. And the reason is they're just not growing. Last time they reported, it was a 1.89% growth in revenue. That's horrible. The sector median is 2.18. And if we go and we look at the valuation, it's still expensive. 26 PE when the sector's trading at 14. And you just had Walgreens come out, a consumer, they had other stuff. But you look at McDonald's and you look at Starbucks saying the consumer's weak. What makes me think that Nike's going to increase their earnings and increase that stuff? I just don't trust it. I don't like it. If you look at the consumer discretionary, it's ranked number 8 out of 9 for footwear. Skechers is the number 1. On Holdings, which, Motley Fool we went over, is the number 5. Wolverine Worldwide, I've never heard of this company. But they're number 2. And so you want to take a look at this stuff. I don't trade just to trade. I have to have a story in order to actually buy that stock. Think about it. You don't go out and buy a car just because somebody told you to. You got to like the lines on the car. You got to, you got to like it. If you go to walk into a shelter and you're picking a dog out, are you going to pick the ugly duckling or are you going to pick the pretty little one like Penny? And no, I didn't pick Penny up from the shelter. She is a rescue dog though. If you are interested in just the top 10 stocks for the second half of 2024, Steve Kress, who's in charge of the quant with Seeking Alpha, he posted this video on, and I'll put it in the newsletter. It's the top 10 stocks of the second half of 2024 that he sees. So it's a good little article, a good little video that you want to watch. It's not long, it's 20 minutes. And it was at the Seeking Alpha Investing Summit. So it's a good one to watch. Now, Dendrodium Queen from Spotify. Hey, Gary, what do you think of Lunar Intuitive Machines? I think you're out of your mind thinking that this one is a great investment, but it's a decent trade. And the only reason I say it's a trade is because you're going to lose money in this. You're just going to lose money. It's pumped up every now and then you want to get out of this. Now, the algorithm makes you 5%. The 4-hour algorithm got you in at 369. It's got, 28 positions over 31 months? Over 31 months, you got 28 positions. So it's less than once a month. Your average win, 30%. Again, like I said, it pumps up every now and then. You can see 51% gain, but you can see 2% loss, 2% loss. The algorithm protects you, but it doesn't make you a ton of money. So do I want you to trade in this one? Probably. I mean, we can go over and we can look at LUNR is the symbol. We can see it's a hold in the quant. It's a strong buy from Wall Street. And if we look at it, 4 analysts. 4. That means nothing. There are 4 analysts that cover this. If we go to Seeking Alpha where it's a strong buy, 3 cover it. 3. So if you want to read those articles, you can certainly read those articles, Queen. But I would say trade this one. Don't own it. You look at, if we go over here, maybe you don't have Seeking Alpha, so we'll go to FinViz. And we look, it's not making money. They're losing $28 million. Okay, they're losing $28 million. They have cash on hand, $1.07 per share. How many shares do they have? 53 million. So they have about $53 million bucks. but they're losing 28 million bucks. They're going to dilute you. They are going to dilute you. This is a hugely expensive capital business. They're going to dilute you. Year to date, you're up 36%. Do not believe the hype and get in early. Trade this one. Do not make this this isn't Apple, for instance. This is one that you want to trade. I don't like it. I don't think it's going to make you money, but if you want to trade this one, have at it. Jacob. Now, wants to know, Jacob from Spotify wants to know about Starbucks. Starbucks is an interesting one. They talked about, we have this huge gap that started to get filled, and the algorithm got you out with a nice 5% gain. You can see once you started to lose confirmation, you could have gotten out with like a 9% gain with this gap. I do think we cover this gap. Since then, we've seen some weakness. The reason we've seen weakness is the consumer is still stretched. And they're not choosing Starbucks. And that's the problem. Howard Schultz wrote an email to the current CEO that said, you've got to change your process. And you've got to understand the customer. The customer is constantly changing. And you've got to keep up. You can't sit back and just say, hey, they're doing lattes. We're just going to continue to serve lattes. Because tomorrow, they might like the Americano. And I don't drink coffee, so I don't know if these names are correct. But you get my drift. You've got to continually change and provide what the customer wants to get them in the store. You have to make your mobile platform easy to order. You have to give rewards to customers for continued service. You have to do all of that stuff. You can't sit back. And unfortunately, Starbucks has not done that. We talk about quality companies. The companies in the core portfolio, and this is not in the core portfolio, they are good companies with good products and good profits and good management. This one, I would argue, the current CEO has not proven himself. He has not proven himself. So until he proves himself, we don't know if they have good management. This is a guy who is a barista every Friday at a Seattle store, and he didn't see the consumer being weak. How are you in your store and looking at the top line numbers, and you're actually talking to customers, and you don't see that, and you have a drop from 88 to 77? I would argue it's an opportunity to probably buy for a 3 to 5 year timeline. But do you want to time the bottom? I would say no. We looked at this and we said, hey, there's some support here because, again, you looked at this. This had a rejection right here. This had some support where you traded sideways. So this $90 I said was worth it, but it dropped down further. And again, the management is the problem. So until the management turns it around, I don't like Starbucks. And it doesn't mean that I'm not looking at Starbucks as a, hey, if I buy it now, I can hold it for a long time. The valuation is still expensive. Make no doubt about it. The growth is the problem. When Howard Schultz was in here, you could grow incredibly. This PEG number was huge. This PEG number was like 0.5 or something because of the growth. But now the growth has caught up to him, and the valuation is just not there. The PE is 21. That's big. That's huge. The revisions, when the analysts look at it, 29 have said earnings per share down, none up. Revenue, none up, 27 down. That's bad. So I don't want you to catch a falling knife. I do think that this gap gets filled on the 4 hour. Now, the algorithm, you can look at it for entries, but I wouldn't necessarily trust it because the algorithm loses you 14% versus buying and holding makes you 8%. It's a little bit because it didn't get you out with this 14% loss. And that's the reason that the algorithm actually loses you 14% is because this looked like a good quarter heading in, and then they just blindsided us. And again, it was management. So you want to look at that story. There is no confirmation. The algorithm doesn't have you in. The MACD is going down on the 4 hour. The RSI is in no man's land at 44. So Jacob, I would wait on that one. But that's how you analyze a story in a stock. You go in, you find the management, you say, okay, what did they say on the last call? You can always go to Earnings Hub and listen to the freaking call. You can get the AI analysis of the call. So, and I don't know this person's name. I'm sorry, I forget. But hey, Gary, could you talk about Elanco on your podcast tomorrow? I'm in the veterinary field, and they provide a lot of our vaccines and medications. I just wanted to see what you think their company is like. So let's go look at Elanco. I am a pet lover. I've got two rescue dogs. ELAN is the symbol. I know nothing about this company, but oofa. That candle today or yesterday. Good thing you looked at this one, because we just traded from 17 to 14, and you're covering this gap. The gap comes probably down to 13. Ironically, the algorithm got you out before. And okay, just to be clear, the algorithm doesn't look at forward candles. The algorithm looks at the current candle, and it says, based on the MACD, based on the RSI, based on the moving averages, where am I? And should I get out? So that 32% isn't manipulated by this huge drop. It just said, hey, we're extended. This $13 buy, you can make money. You should be taking the money. The Bollinger Bands cinched up here at 17. You went all the way up to 18. So from a chart standpoint, this one looks juicy on a rebound. But again, I would wait for quite a while for this because something happened to it. Now, let's see what something happened, because if we go to Elanco here, do we see any news? Let's see. Elanco wins FDA. That was from Tuesday, May 28th. I don't see any news. So I don't exactly. Let's see if FinViz has any news, because we can look. It's only got an $8 billion market cap. It looks like they're losing money. So maybe that had something to do with it. It looks like, yeah. Let's see. Elanco provides innovation update. PR Newswire. Let's see. Elanco, the company had received confirmation from the FDA, are complete as of late June for labeling minor technical section earlier this week. Company aligned with FDA language and expects to receive the completion letter by mid-July. So it looks like there was a delay in some type of medication or something. Elanco continues to view Zenrelia as positively differentiated for effectiveness and convenience, which we believe can address unmet needs in the market. However, we expect the U.S. label will include a boxed warning on. Oh, they got a boxed warning thing. So yeah, it's the same thing as biopharma, even though it's in the pet space. Any news that the FDA is considering a label or doing anything, it can kill it. And it's down 18%, 19%. So is this a buying opportunity? Let's take a look at some of the financial stuff. Right now, it's in the quant. It's a strong buy. If we look at that, the valuation is, let's see, it's a little bit stretched. The PEG going forward, 1.6. Industry, 1.8. So you're below the industry. So it says it's a buy. Now the growth, it's a B. Are they expected their actual revenue growth year over year, minus 1%. So I don't know that this is a huge, like, oh my God, I've got to run out and buy this. It's not in my wheelhouse. But I think if you're a veterinarian and you're recommending these medications and you see pets actually responding to these, you've got a leg up on us. Now, if you've just got a drug rep that comes in and says, hey, these are the next greatest things and look at these results. I have learned Galliprant is one. My old dog, Johnny, and this person who asked me this question specifically may know this. Galliprant, my dog was suffering from some kidney stuff, and the vet said, hey, this Galliprant, and she went over these 4 or 5 things that she said. And essentially, my dog didn't react well to the Galliprant. Actually, I had to put him down about 2 weeks later. I don't know. He was older, so I don't know if it was the Galliprant, but I do think the Galliprant had something with it, because my parents' dog 6 months later, who was also older and had some kidney issues and had some issues with stuff, that veterinarian in New Jersey, again, this was a veterinarian for my dog in Atlanta, that veterinarian in New Jersey basically said the exact 4 or 5 bullet points. That told me that some drug rep was in there pointing out the actual top line. I'm not pointing anything at. This was, both Blue Pearl, things. I didn't sue anybody. I didn't blame anybody. Both dogs were old. I don't know that Galliprant was it. But when I did some research, they had tested 200 dogs. Of that, 20 dogs had died. 10% had died from kidney issues. And the FDA still passed Galliprant. I don't know how to read those research stuff. I'm not smart enough. I just read that and I said, holy shit, 10% of dogs die and you're issuing this? on a basis of, here's the 4 or 5 points as to how it, helped the 80%. I wish I would have known that 10% of the dogs actually died. But the veterinarian didn't tell us that. It was clear. It was just hey, we're going to try this one. And I think they thought the dogs were older and we were just, looking for a last-ditch effort. But it did seem like both veterinarians had an issue. So I don't know. My point is, a lot more about this space than I do. And so if you think that Elanco is providing you a good veterinarian supply of medications, then I think you go ahead and buy it. Do you make it a huge portion of your portfolio? I don't think so. I just don't think so. I mean, again, you can take a look at the stock chart. The stock chart shows it's a bottom left, upper right kind of trajectory. For the rebound. I'd say your resistance level is probably 20 on this one. But that current candle of 18%, that would scare the F out of me. And I would wait to see what the hell, why is that just a labeling, getting a 20% drop in the stock? I mean, there's more to that story. So good day to ask me about that. Bad day if you bought it yesterday. Because if you bought it yesterday, then you may not have the 4-hour algorithm. Because the 4-hour algorithm on this one, it is, it got you out right before. You can see it got literally, that 4-hour algorithm is so good on many different occasions. And it doesn't tell, again, it didn't know that this news was coming out. It didn't know that there was the potential of this news coming out. But I would say if you can get this in the high 13s, it may be worth a pop to 20 at some point. The valuation's not extended. It's not crazy. Josh from Spotify. Hi, Gary. Your thoughts on HYLD? I started a small position in HYLD and HDIV without much expectation. However, I've enjoyed reinvesting the monthly dividends back into my main portfolio of stocks. HYLD is one of those stocks. I think I have this. HYLD. Why don't I see HYLD? This is the high yield stocks. Enhanced. Oh, yeah. I mean, there's no rankings. HYLD, I don't know. I mean, I can't find it. HDIV. These are Canadian stocks, I think. So here in the U.S., might not be great for us. HDIV Canadian. I mean, these are the yield is 12. Josh, I will tell you this. Yes, you're enjoying that thing. I don't know the analysis of these. I am not a believer in these high yield dividend stocks. I'm not, because at some point in time, the rooster comes home to fetch. And at that time, your capital is being taken away from you. So from a long-term standpoint, I don't think you buy and hold these. I think you trade them around that yield. And so if this is a monthly yielding stuff, I think you can trade it around that. If you are 70 or older and looking for income, these are great. These are fantastic to have as part of your portfolio because it provides you income. If you're younger, this to me makes no sense. But again, everybody has different risk tolerances. If you like that income and you feel comfortable with that income, great. I don't. I never did. I didn't like dividends because dividends come out of stocks. I always just make the decision, is the stock a good stock? The dividends are just gravy on top. A good example is MPLX. MPLX has flattened out here at about 42, 45, somewhere in that neighborhood. It has flattened out. Do I want the continued 9% dividend, 8.02% yield? I love it. I like it. That's a good yield for a stock. Am I happy with that when NVIDIA's going up 100% in 6 months? No. And that's the difference. So if you like that stuff, fantastic. Go ahead. Provide yourself some income. In my mind, I get annoyed as F when MPLX starts coming down to the 30s and I'm making an 8% dividend. Yes, I'm making money. But it kills me that my capital, it could be earning money somewhere else. And that's essentially what you have to look at, is where is your capital making you the most money? And in my mind, I'd rather invest in growth. But again, I point this out all the time. We all have different risk tolerances. That's why I don't want you to follow anybody into stuff that's not back tested. If somebody's giving you advice and they say you've got to invest in this. Well, how much have you invested and how much have you made over what period of time? That's it. And the charts can tell you that. Unfortunately, I can't chart it in here because it's a Canadian stock, I think. Let's see if HDIV. I think it's Canadian. Yeah. I don't have it in TrendSpider, so I can't chart it. The only thing I could do is look at Seeking Alpha. So, but it's the same thing as QILD. It's the same as that kind of stuff. You can enjoy the dividends, but take a look at your capital. Right now, I'd say that it's doing pretty well, but again, what I know about those, that a lot of these things haven't been back tested. We can look at QILD. I mean, this was a top pick yesterday from Bryn Tarkington, who's on CNBC. She loves this one. She loves trading in and out of this one. This is an 11% yield. It's a covered call ETF on the NASDAQ 100. And she says, while we're trading sideways, she's enjoying a 9%, an 11% dividend on a monthly basis. On a monthly basis. It pays out monthly. So at the end of the month, she buys it. She gets the 11% dividend and just, continues to capture that. And you can see over 1 year, it's up 1.84%. If we go and we look at the charting and we just look at, I'm going to select metrics. And what this does is when you look at the performance and you look at total return, not just price return, this includes the dividend. Now, 1 year, you're making 14%. It's a great 15% dividend. But the S&P is up 26%. Now, 3 years, you look at this one, QILD is up 13%. This is the total return. S&P up 27%. Now, let me see if I can put your symbols in here. We'll go to HYLD. I think it's going to do it. Yeah. This is HYLD. Let's just look at this one. Okay? HYLD, over 3 years, you're up 4%. That's total return. Total return. QILD is doing better than that. S&P up 27%. Now we'll add in QQQ because that's the one that's going to blow everything away. Because again, over the long term, QQQ is making 38%. Your QILD, you're making 13%. Yes, it's yielding 15%, but you're losing capital. And the only reason it's actually trading sideways and you're getting 15% is because QQQ is up 38%. But where you put your money matters. And yes, you can enjoy the dividend returns. But I would argue all of these high yielding, if the market goes down, you're going to see those things come down. Yes, they will trade you 15%. But remember, say HYLD, it's trading at 17, QILD, say it's trading at $20, okay? And it's paying a 50% dividend, just to make numbers easy. Okay, so every month you're getting $10. Well, when it goes down to $10, a 50% dividend is only $5. So it's going to take you a significant amount of money to make that money back. So I would argue the actual stocks are just better. That's it. Nothing else. Now, Jeremy from the Facebook group wants me to, in lieu of the debate tonight, what's your take on DJT stock? DJT is a grift. I mean, and if you don't know what a grift is, go to Urban Dictionary and you can look up grift. This is 100% a grift, okay? Because when you look at this one and you look at, let's look at valuation, okay? They're not making money. Look at their sales. The price to sales, for every dollar in sales, they're spending $1,783. I mean, I'm sorry, price to sales, $1,045. That's 86,000% above the sector. 95,000%. That's not 95,000 above. It's 95,000% above. This is a grift. This is one that you trade, but expect it to go to zero. I mean, honest to God, it got here at the $10. This was a SPAC that was folded in. The market cap is $6.94 billion, 10% short interest. And the only reason, Devin Nunes, if Devin Nunes was your congressman and you voted for that douchebag, then yeah, DJT, he's the CEO. It's a horrible stock. And I've said it before, there are a ton of Waffle House locations that make more money than DJT. That doesn't mean you can't trade it, but don't get stuck in it. It trades like a tech stock. It is not a tech stock. I would not be surprised. This could go to 10. Tomorrow, it could go to 10. It could also go to 80 because it could get a short squeeze. Now, if you want to trade it on the 4-hour algorithm, that's great. You make 82% versus just buying and holding makes you 24%. That 24% is just because when Trump went to jail, a bunch of these high flyer, I'm a patriot kind of people. And I would argue if you're overly patriotic, you're either in the military, which is fine, and I love it, or something's up. But they wanted to support Donald Trump, so they bought this stock, and they're holding it. This is similar to GameStop, except it's got less valuation than GameStop. GameStop makes a ton of money. They just spend a ton of money as well, and they're losing, their revenues are actually going down. This one doesn't even have revenues. It doesn't. It makes no money, and they will dilute you. It is a grift. Trump will probably say, hey, at some point in time, I have to fund my campaign. I'm going to sell my 60 million shares. Okay? Understand, there are 176 million shares outstanding. Only 43 million are on the market. Trump holds the large majority of those shares that are held and not on the market. The second he starts to sell, this goes to zero. It goes to zero. They have $350 million in losses, okay? $350 million in losses. And they have $176 million in action. They are grifting. They are paying huge salaries to their own people. They are donating to the campaign. They are doing everything that you don't want to do as a company. It is a grift. So my thoughts on Trump and Biden, I'm not going to get into it. Politically, there's no win there. I like Joe Manchin. Joe Manchin said it today, and he said it best. I don't care which party you are, but whoever wins, I want my president to do the best that he can. Even if I disagree with him, I still want him to do the best that he can, and I will support him. That's the way I'm looking at this election, because I don't want to vote for either one of these monkeys. I would vote for Joe Manchin in a heartbeat. I would vote for, Dean Phillips in a heartbeat. Dean Phillips was my guy. Didn't get my guy. I'm not bitter about it. I don't know who I'm going to vote for. But I don't want to vote for either one of these monkeys. Now, the debate tonight, will I be watching? I'll probably wait for the highlights. That's it. I mean, it is what it is. Trump needs to get out. He's so desperate to get out there and debate and make Biden look like a fool that he accepted this debate. My hope is that, Biden kind of schlubs and does whatever he does and doesn't show up with any energy, and that it's a train wreck. And then the Democratic convention comes out with somebody who can actually beat Trump. Because I don't want to vote for either one of these monkeys. I'd vote for anybody else. I mean, RFK is looking like a good job, a good vote for now. But again, DJT, it doesn't mean anything. It's not a pump. It's not going to go higher because he's president. I think it's just people who are overly patriotic on this thing and want Trump to win. And those are the people who are, if your entire identity is putting Trump's name on your truck, come on. Don't make me go into the story about, I have Trump family ties. I'm not part of the Trump family. But the 6 degrees of bacon, 6 degrees of Kevin Bacon, if you guys are my age, you know that. I got 1 degree to Trump. So, yeah, it's a grift. And I can tell you everything that he does is a grift. Unless you have a Trump University, diploma. Or maybe you have Trump wine. And we can go over the list of things. The Trump casinos in Atlantic City, where he declared bankruptcy. DJT, if you didn't know, DJT was a stock way back in the 2000s, went bankrupt, delisted. That's where this one's going. No doubt. Scans, Meta. Meta's just a stock that continues to print. It's at 520. A couple days ago, I said, hey, buy it when it's under 500. It was under 500 just on June 24th. That's 3 days ago to begin the week. It's at 520. This is one that they're getting the political election. If you don't think that these guys, and I heard a great podcast from My First Millions, yesterday or the day before about what business to open if you have no money. It was fantastic. It was fantastic. And the guy talked about how Meta is increasing the price of their advertising. They're increasing it because they've gotten so good at targeting again. They were fantastic at targeting. Apple put a little cock block in on them. And then they said, you know what? Hold my beer. We're going to get better. And they got better. Meta's in the core portfolio. It should be in your portfolio. Boeing announced that they're going to start selling. Here's the thing about Boeing. I constantly think about taking this out of the core portfolio. But in my mind, at this price, the valuation just makes sense. It's not like they're not going to sell these jets. It's not like they're not going to sell planes. It's not like they're not going to maintain planes. It's not like they're not going to do defense work for the government. Everything is going to happen for this company. It's just riled in this political spectrum where the door flew off. And yes, the safety. It's not a well-run company. We talked about having good management. This is shitty management. And Elon Musk said it best yesterday. I mean, he really did. He said, I don't understand why a airline, a company that makes airplanes doesn't have an engineer in charge. It's a freaking $1 a bean counter. When was the last time Boeing was actually headed by an engineer? That's as simple as it is. It's easy. It's business. I was going over it with my buddy yesterday at lunch. Business is simple. There were several business decisions that not myself, but my management made that I didn't make sense, and it was wrong. And it just, like getting rid of the Earthlink brand. Windstream wanted to get rid of the Earthlink brand. Well, what happened when we talked them into saving the Earthlink brand and putting it on the market and selling it? They got $300 million versus literally 2 months before that. Tony, the CEO, said, you know what? We're just going to fold you into Windstream and we're going to retire the Earthlink brand. We're not going to sell it. Monetize that shit. Monetize it. Sell it. $300 million will do wonders for a company that was 2 months away from bankruptcy and, by the way, got $300 million and still declared bankruptcy. So business decisions are bad. Bad business decisions are made all the time. It's easy to fix Boeing. Put an engineer in charge. Don't worry about the money. Don't worry about the profits. Put an engineer in charge. It might not be great for shareholders. Put an engineer in charge. And then 2 years from now, this is back to a $500 stock with a 10% dividend, 5% dividend, because you will instill confidence in this brand. It's not that hard. Again, it's not that hard. They are not free to do that type of stuff. But Boeing, that's why it's in there. We got a sector cross up, XLY. Yeah, and you know why it's crossing up? Because Tesla is roaring towards 200. XLY, when we go over here to Seeking Alpha and we look at XLY, and I probably went off too much. I'm looking at the time. I went off too much on the politics stuff. You guys got me fired up about that one. But XLY, when we look at the holdings, it's 22% Amazon. It's 14% Tesla. XLY is back in the game. It crossed up on the 200-day. The 50-day is crossing up there. The Bollinger Band, it's trading at the top of this. If we look at a long-term chart of XLY, you're just looking like you're getting above the 9-day again. It looks like, 185 is going to be some resistance, but I think we get back to this 216. It's going to take Tesla to drive it there. Again, MACD is just crossing up. It's just crossing up. So XLY, it's a good looking chart. Roblox gets a cross up. I've said it before. This is up 2% today. And you can buy it right now if you want. This is a $40 stock. This is going to cover this gap to $39. It's at $37 right now. I've said it since the algorithm got you in here at 32. This is a $40 stock. Did I take this trade? No, it's not in my wheelhouse. It's not in my wheelhouse. I've said it before. It's a $40 stock. You can buy it under and sell it over. I've given you that advice. Just because I don't take the trade doesn't mean that I don't know what I'm talking about. Would I have loved to make money? Absolutely. I've raised this one many times before. And I've said this is your trading range right here at 32. What's the top? 45.
but it's a $40 stock. You're going to make that. Look, 1 bounce, 2 bounce, 3 bounce, and it just made a new higher low. And so $30 is now 32. Say 32 is now your support level. It made a higher low. Look, this one bounced here at 32. Where'd it go? It went up to 46 and then it lost it. It went up here to 47 and then it lost it over a long period. It bounced once on the earnings, but then lost it. And then this earnings came out and it was a 20% candle. So Roblox, great buy. Great buy. Any of the other stuff you have in there, if you like the charts, if you like this kind of stuff, then sign up for TrendSpider. TrendSpider right here, it's the top link. $54 a month, $53.50 for a year. You get my 4-hour algorithm. You get the 65-minute algorithm. You get the 5-minute algorithm if you like. You can trade on any of those. You get my watch list. You get all the scanners. Everything that I just did, like Roblox telling me to buy in there, that's a scanner, and it came up today. GCT, we talked about GCT. That's a buy in the scanner. Now, is that a great buy? I would argue I'm adding just for the long term on this one. GCT is up 0.1. It's flat, 29.47. Doesn't really have confirmation. I don't know that I'm rushing in to buy this one, but I bought it 33, 38, and 40, I think. I think those were my 3 buys. So, hey, you do what you want. But again, the 4-hour algorithm, I think it's great. I think it helps me. It takes emotion out of my trade. It helps me find the stocks that I want to buy. Seeking Alpha Premium, we talked about the quant. We talked about all that stuff to read the articles without any commercials, any ads. It is a great website, 20% off your premium membership. You save $50, I think is what it is. Now, Alpha Picks, we talked about Alpha Picks. You get one on the 1st. One's coming up on July 1st. We talked about Bluebird being the most recent one. You shouldn't, maybe I shouldn't have said that. But again, if you want to read any of that stuff, Alpha Picks and Seeking Alpha Premium are 2 separate subscriptions. Understand that. 2 separate subscriptions. And the reason for that is because Alpha Picks just gives you the analysis of those Alpha Pick stocks. And it tells you which ones are strong buys, which ones are holds, and everything of that sort. It does tell you the current status of them. But you can't look up the quant rating for, say, Apple, which isn't an Alpha Pick. You can't look up the quant rating for, say, Dell, which isn't an Alpha Pick. You can't look up, I think Amazon and Meta might be Alpha Picks. But for instance, NVIDIA is not an Alpha Pick. You can't look up the quant rating for that. You need Seeking Alpha Premium. So it's 2 separate subscriptions. But again, all 3 of those tools, in my mind, they are part of my process, part of my system, part of the way I look at things. If you don't want TrendSpider, you can get Webull, which has free desktop software. And you'll get free stocks when you sign up. Use this 4th link. The Daily Stock Pick newsletter, it's the 5th link down there. And if you want the Savvy Trader, it's down here. If you want AT&T as your home fiber service, I have home fiber. I love it. Visible is my cell phone company. If you just want to say, hey, thank you for everything that you do, I got my Venmo, PayPal, and Cash App down here for you. Any of the socials, they're up top. If you have any questions, hit me up. I will be back tomorrow for a summary of the week. Okay, talk to you later. Bye. Larry. Boy, it's hot in here. It's getting hot in here. Scheduling misconflict. Let's see. Indices check, and then I'll go over Altria. Altria, I hate, by the way. Star. I mean, they do vapes. There's nothing good in Altria from a society standpoint. So I try and stay away from it. I'm just not a fan of it at all from a company standpoint. But we can look at it. Altria. Stock standpoint, $45.99. Algorithm makes you 9%. Buying and holding makes you 2%. Algorithm got you in at $45, $46. You're at $45.70. Today's candle looks horrible. I don't know that I get it from a standpoint of fundamentals. Growth. I mean, who's increasing smoking? But looks like revenue 10% year over year. But they're getting, everything else, revenue growth forward. Looks like they're not going to grow. I just, again, it's tobacco. I can't imagine if you smoke and you're pouring money into Altria or into Philip Morris. I mean, Philip Morris is a bit more expanded because they own like Kraft Foods and stuff. But even Kraft Foods, I mean, I love Kraft macaroni and cheese. I really do. The squeeze cheese is the freaking best. But it's all crap. I mean, it's not healthy for you. And I don't know anything from Kraft that's healthy. So, Altria, I'm not a fan. And I think it goes back to, I do think that they're shady as fuck. I mean, that's just it. These companies are shady as fuck. They want to get people hooked. It's kind of like the farm. Part of the reason I don't like the pharma business is, and a guy said it best the other day. He said, and I forget who I was watching. They blocked the settlement. So the Sacklers can get sued. But the Sacklers are untouchable. They'll just declare bankruptcy and then you can't go after them. So that's I don't know. But again, it's kind of like pharma, like that. What we have in this country is not health care. It's sick care. Because if it was actually health care, we'd be health preventative. And that comes from food. And Altria doesn't provide anything of substance to me. And I may be wrong. I mean, you could tell me that I'm wrong. Maybe educate me about that. But, I mean, it's, 8.46% dividend. In my mind, if you're looking for that dividend, I'd rather go, again, I'm not a huge, I want renewables. But I'm a realistic person. MPLX, I'd rather get the dividend from MPLX and the growth from MPLX than to rely on a tobacco company. And they have about the same dividend. So that's the way I look at it. So hopefully that makes sense, Star. Okay. If you have any questions, hit me up. I got to go cut the lawn before